back to our Samvat Special Market Masters. I now have Sridhar Sivaram of Enam Holdings joining me in the studio. Sridhar, I'm not going to start with stocks, I'm going to start with gold. You have been a gold recommender, if you please, but it's already risen about 30%. Would you still buy gold?
So, Latha, I've been very bullish on gold for a while. Actually, I started investing in 2013 and I have been doing a sip on gold. And then the sovereign gold bond came and I realized what a great instrument that is. But, apart from this, gold has actually done very well. If you take a 20-year period also, it has done almost as well as Nifty. About 14% return it has given. And people miss that gold actually is a hedge against the currency also. Plus the fact that with so much of printing of currency, especially from
including
the
dollars.
Yeah, I would do that. That is the most important one. That and most other central banks also doing. So gold becomes like a store of value. So some of the younger investors may look at Bitcoin, but for people who are seasoned like us, we still prefer gold. Plus central bank buying has become a big reason for gold going up. I think gold will continue to do well over the next 4-5 years. I mean, the other interesting statistics on gold is that if I take the last 20 years, there have been only 4 down years in gold. So it's had a positive on every of the other 16 years. And the volatility has been very less. The maximum drawdown in any year has been only 8%. As compared to, say, a Nifty, which has had 2 years when it has had more than 25% drawdown. So it's been a very stable asset class, and my view is at least 10% of your savings should be in gold. It can be in one of the paper instruments, ETFs, or any of the others, but I'm still quite a bull on gold.
Well, then let me, I mean, this is such a cast iron case. I have no further questions to ask. But considering that there could be a Trump victory, nose ahead, we are given to understand in the race, not that the Democrats are going to be any more fiscally prudent. They are also going to be fiscally loose. Do you think, the dollar printing and hence the run for gold will continue? Yeah,
so I don't see either of the parties, if I see their economic agenda, I don't see them actually being very prudent as far as fiscal deficit for the US is concerned. So which means that they will be printing more, which is good for the US. Plus, I think most countries are now worried about having all their surplus in US dollar itself. I mean, we are seeing the Indian Reserve Bank bringing gold back to India and not even wanting to keep it there. I mean, these are signs that you want, in case something goes wrong, you want to be safe. I think this asset class will do well. You can't expect every year to be like what it was this year, where gold is almost done 28-29% return.
31. I just checked before
31.
Coming.
So
I mean, YOY, not
yes,
YTD.
Of course, yeah. So you can't expect that to happen every year, but over a period, I think it should give double-digit returns.
Okay, now that's very important advice, especially coming on Dhanteras. It makes it also auspicious, or Choti Diwali. Let's come now to the markets. I began by saying 7.5% lower. Is that a good thing because we were expensive, or do you think we have to lose more flab?
Yeah, so I'll give some data to put this 7.5% in perspective. That this is the 54th month that we haven't had a 5% or more monthly correction. So this is start to end month. So the last time we had a 5% correction was in March of 2020. 4.5 years ago. Yeah, March of 2020, which was the COVID month. If the market ends where it is, by the end of this month, we have one more day, then we would have had a 5% correction, which is coming after the March of 2020, which basically says that in between we had corrections, but the market has been buying every fall. As a result, by the end of the month, the market would have either fallen less than 5% or has, moved up. The previous best was about 30 months. So we've had a dream run as far as the market's concerned. And just look at the 1-year returns for Nifty. After the correction, it's still up 25%. Mid-cap is up 45%. If you had asked this question, if you had asked this question last year, same time, when we had, 2 wars going on, we had an Indian election coming up. And if you had told me that the government is not going to have majority the way it had, I would have said it's a joke. How can you have, mid caps rallying 45%? But that's the reality. So I think this market could take a pause. And that's our view, that next 6 months is like a pause where the market digests all the earnings. We do have some slowdown, especially from the rural areas. And we have to wait and see how this plays out. And there is some bit of slowdown even on the urban consumption we are hearing from the FMCG companies. I think it's good if the market digests all this. We have US election results coming up. So with all this data, I think the market may take a pause for about 6 months, is my view.
Okay. Well, actually, you were one of the first to alert us about the MFI problem as well.
Yeah.
To be fair, our Abhishek Kothari also was, harping on that point and proving it with numbers about the microfinance issue. You think this is a deeper malaise, or do you think it will pass? I mean, you're not interested in any of those, including, Bandhan, IndusInd, where the MFI part of the book has done badly.
I think this is a bigger issue. I don't think this goes away in 1 quarter. So let's look at MFI. It's about 5 lakh crores book. I think at least 10 to 15% is a problem, where these women have loans from more than 5 or more lenders. So that itself is, say, about 50,000 crores. So we could have an issue of 50,000 crores. Plus, what is happening is that the industry now is pulling back, which is not giving more loans.
Yes.
And this has been my point, that there was an evergreening which was happening in the industry. I mean, industry didn't want to accept. I have challenged this, because your customer growth is only 5%, and which is for the last 7 years, and your loan growth was almost 25%, which basically tells me that you're giving loan to the same lady again and again. So at some point, this
would turn bad.
This would turn bad. I think it's only now that the industry is waking up. Reserve Bank has woken up. They have banned four of the MFIs for various other reasons. I think this is slightly deeper. It may take another 2 quarters, and till this entire thing is flushed out and there's more discipline in the industry. This is a problem. You have to keep in mind that this is subprime. This is lending to the lowest category.
Lending to the riskiest.
And unsecured. So it isn't like, I'm not so worried about gold loan, which Reserve Bank is, because at least there is a collateral there. Even if there is a loss, the loss would be what, maybe 70%, even if the person hasn't done good due diligence. This is 100% loss, and the collection mechanism is very tricky. You have to go there in person and collect. Okay. So I think there is more problem, but I'm happy that it's come out now before it became a bigger problem.
Bigger issue, absolutely. Let me come to where we should be training our eyes. If, as you say, logic prevails and we don't see a very, yet another repeat of a 30% or a 25% Nifty gain and a 40% mid-cap gain, where should we preserve value?
Yeah, so I think, Latha, sector-wise, it's becoming very difficult, because within sectors...
What about EMS? I mean, you saw the Keynes numbers, Dixon numbers, all.
So we are actually bullish on EMS. So we've been, long EMS for a while. But keep in mind that this is a segment where you will see quarterly earnings not very consistent, because some of them are low margin business, but the window of growth is huge. So we are invested in quite a few EMS companies, but keep in mind that these have also rallied a lot. I mean, some of their market caps are now 80-90,000 crores. So they are no longer small, and the market is discounting almost next 4-5 years of earnings. So we are bullish on, actually we are bullish on manufacturing. Okay. So EMS is one of them. Power equipment is the other, where we think that the runway of growth is very good, but keep in mind, even here, the stocks have really rallied. So this is not for investors to go and buy them blindly. It requires certain skill to understand where the earnings visibility.
Which part of the
exactly. So that even pharma manufacturing, especially on the CDMO space, we are very bullish because of the the Biosecure Act, which the US has just passed, and some more regulations have to come over the next few years. We'll see a huge benefit to pharma companies who are in the CDMO space. So in manufacturing, but these are very specific, pockets where we are very bullish, and you need to understand which companies benefit here.
Of course.
So it's a very bottom-up
I'm going to cling to the theme, because when you gave us the PSU theme, we didn't realize, and now I'm going to cling to this pharma theme with both my hands. and just see how it progresses. What about private banks? I mean, when the first Kotak and IndusInd came, the market was rattled. But after that, ICICI, Federal, and even HDFC Bank, the numbers.
So even some of the PSU banks, if you see the larger banks have done well.
Yeah. PSU, so, all of them. PNB has done well. Canada, Indian.
So
Canada was soft.
If you ask me overall, at least there were no howlers there. No. It was a difficult, I would say, a quarter to go by where your costs were going up,
deposits
were going up, and there were some challenges as far as headwinds on retail is concerned. So you are trying to maneuver those. So I would say the larger banks have broadly done well. We are invested in both the PSU and in the larger private space. Obviously, the private banks haven't done well as it should have because of the various headwinds. And I think the market was right because there were challenges that these banks were facing. If you ask me from here on, given our outlook that we see a consolidation, we are not expecting a 25% growth in the Nifty for the next year for sure. If it comes, great. But, that's not our base case. We are happy to, be invested in some of these banks, both in the private and in PSUs, because some of the PSUs are trading at, just below book, 5-6p, maybe 3-4% dividend yield. It looks safer at this page. I'm not expecting re-rating like what we got in PSU Banks 3 years back.
3 years ago.
So that is not going to happen. Majority of the re-rating, majority of the, outperformance has already happened. Okay. This is going to be more steady. If they do, 15% earnings growth, then I'll be happy with a 15% return on the stock.
I'm being warned that I've absolutely overshot time, but last sentence, what are the plus? You already told us what you like in terms of manufacturing, pharma, etc. Any other pluses, and what is the avoid?
So Latha, I think I'm not very bullish on the IT space. Because I think, and this has been my view, that AI is disrupting them. Obviously, some of the companies will disrupt themselves, and on a bottom-up basis, you will find stories. But I'm not excited when companies are growing at 3 or 4%. And the debate from the analyst community is whether it is 4 or 4.75. It doesn't matter to me. Whether even if it is 5% growth doesn't excite me. So I'm not in that space. But obviously the stocks have done well. So I have to be honest that I've been wrong as far as the IT sector is concerned. But I don't have to win all the battles. So I can pick and choose the battles that I want to.
Oh, absolutely. Win. This is an unfinished conversation, and we will call you back.
Sure.
2081 Samvat, but 2025 is only 2 months away.
Yes.
So we'll invite you yet again.
Thanks for Latha. Thanks for inviting.
We'll have to wrap up this Samvat special on that note. Thank you very much for watching.